This is Alan Farley from FX Empire. Best Buy was a fairly weak performer until 2017 when it finally broke out above the 2006 high. Now it spent the next 2 years sort of crisscrossing this breakout level, testing it in 2018 and again during the first quarter of 2020 during the pandemic swoon. Now support right up here around the 60 level held in both cases. Now on the upside, the stock broke out in February, broke out above this 2018 high, and then failed to break out during the pandemic sell-off. It completed a V-shaped pattern in July and then broke out in a very, very healthy breakout, reaching almost the 120 level in August. Now that level also marks the 1.618 Fibonacci extension, which is a very common turning point after a strong breakout. Now, if you look at this weekly price bar, it's a pretty big scale reversal right after earnings. The stock was really overbought when it went into earnings, and shareholders chose to take profits and walk away. Now, this pullback here could expand into an intermediate correction, and there's quite a bit of room on the downside for the stock to move. But I think as it pulls back, it's going to offer a very strong buying opportunity, perhaps around 100, even a little bit lower, close to the breakout level. Now, a good place to watch in coming days is the weekly stochastics oscillator, which just crossed into the sell cycle, predicting about 6 to 9 weeks of weakness. Now, that sure isn't a sure thing in this very momentum-driven market, but it is something to watch. And the deeper it gets into this pattern, the closer the stock will be to a deep and satisfying or profitable long-term buying opportunity.